Guys, uh, this is something that I wanted to talk to you about. I've attached a video which you're going to see now, and we're going to see the levels that I marked and the results that we got out of those levels. They worked out perfectly. I actually was able to pinpoint the levels that were going to be the ones significant levels from where you could enter, from where you could exit, and all of that just by using my volume profile tool. It's no rocket science. I'd like to, give you this perspective. I am looking forward to helping traders who are not successful, who are depending on other people to get their levels and other people to get their signals to trade, to learn to read the charts and find the levels where things happen. You just can't trade from anywhere on the chart or anywhere in the price spectrum. The market moves in ranges, and you got to buy at the lower ranges and sell at the higher ranges. You got to initiate your long trades at the lower ranges and book out your profits on the higher uh, end of the market. And similarly, you need to do the reverse when you talk about the other way around. So this is exactly what I would want you to do. Yeah, I got interrupted with a call in between, and I had to take it because it was urgent for me to take it. So this is what I'm trying to explain to you here. I've been putting out these videos and just using one tool. The volume profile tool is the only thing that I use, and obviously a little bit of price action and the reading of the charts and some psychology between the candlesticks about the candlesticks. There are a few things that I know and I've learned them, and that's all I need to read to get to the markets. Now I have a program where I want to give back to people who want to play with the markets. You can't play with the markets without knowing where the price is going. You can't be putting in your hard-earned capital to risk without understanding the mechanics of the market. I did that for a very long time, and I suffered. I'm going to accept it that I did suffer. But having gone through that suffering, I now know where I was wrong and where a lot of traders out there who are making the similar mistakes can be, saved from losing out their hard-earned money and the capital. When we do these trades, we not only affect ourselves, we affect people around us. It affects our psychology. It affects the other part of the day when we are not on the chart. So if you are somebody who is really interested and thinks that trading the market is something that they want to do, and believe me, it's a very exciting world out there. And if you succeed at this, you can have everything in your life, whatever you desire, whatever you dream. You can all have all of it from engaging with the markets. So this is the preface to the video. Go through the video. If you've not seen the video, the weekend election, the weekend analysis video, if you've not seen that, see that first. I'm going to mark that out in the end of in the video playlist in the description. You can go see that first and then see this video and see what are the levels I gave and what was my commentary on what the markets can do. And then you will get to know how I read the charts and how beautifully the market has reacted exactly the way I thought it would. Now there's a lot of volatility. If this volatility can be handled by the levels that I gave on in this weekend analysis, there's nothing that you can't handle. So with that said, look at the video, go through the entire video, and then if you feel that you could be helped with the kind of analysis that I did and you would want to get into that field, get in touch with me and I would be more than happy to help you. Look forward to engaging with you. Thank you. Good evening, everyone. This is Manoj from Market Ideas for Profit. And as promised, I'm here with the index charts, the Nifty and the BankNifty charts, trying to analyze the post-election and the post-news that the Modi government is going to be sworn in on this Saturday. So we've had what a beautiful volatile period. The elections have given us all the drama that we required from the markets, and you guys have been witness to some crazy moves in the market. So let's look at what we analyzed before the market, before the elections, and what was something that I predicted could happen. So if you see, these were the ranges that we set up for ourselves, and we were somewhere. Now this is the daily chart. We are sitting here on the 30th of May. This was the 31st of May. This was the Monday. Now, this Monday was an outlier from what I thought would happen. I was expecting Monday to be a little silent before the excitement that could get generated on the election day results. But I discounted the fact that the pre-poll exit polls are going to be something that's going to cause the mayhem that we saw. It was absolute mayhem, to say the least. The pre-poll, the pre-exit polls, or the exit polls, post-exit polls were really crazy. The media made us to believe that the Modi government is going to come with that resounding majority and close to that 400 seat mark that they were promising, and that got the market excited, and we moved way higher in expectation of that, sticking to that exit poll results. And this is what we saw that day. And then came, but now here, what I also commented here. Now here, I still commented that we are seeing still, we saw a sharp drop of volatility on that day. The VIX went down, and that was not something that was not characteristic, because generally the climax should be held on to the last day when the election results happen. So I was still not comfortable with that move, and I did not participate in the rally, though I did book out some profits, expecting that there is one more round of volatility that could be, in the move. Now, why? How could I say it? I could say it because I'll just point out to you why I could say it. We'll go to check the India VIX here. Let me get the India VIX here, because that will give you the real perspective as to what I saw and prevented me from going full on in the mode that a lot of market people went in, and it was real chaos out there. So what happened? This is a volatility index, and I've been mapping this and charting this for all of you all, and this is how it transpired. Now we're going to be on the daily chart here, and this is the map that I've been charting for myself. Now we started our volatility rise somewhere at this around the 24th of April. It began to rise. And on this particular day, this was the Monday. On Monday, the volatility dropped down. Now, this is not what generally happens. The volatility would be at its peak on the election day. It should not peak out a day before. And that's exactly what happened. The volatility started to peak out and came down. And then this was the exit poll day. And on the day of the elections, the results started to come in the morning. And after the trends in the beginning started to make in, the volatility rose again. And that's when the markets fell. So if you now we will look at this candle, which is the 4th of June, which was the day the election results were declared, and see as the volatility rose, the VIX rose, the prices began to crash down. And in my analysis, I'd categorically said that these are the two levels that, in case the results are not to the expectation of what the market was thinking, these are the two levels that are going to be tagged. And how beautifully you see the markets went down on the election result day and then reversed back, and then ended the day somewhere close to this point, exactly where we pointed out. And the next day they opened there itself and went higher. And this is the action that we closed at yesterday. So if you see, the moves exactly correspond to the levels that I had marked out. Now, these levels don't come from just anywhere. They come from my study of the volume profile. So there's a science behind these levels. It's not just coming out arbitrarily, but the point to be noted is that the levels that I marked really worked. We went down, we took a wick, which is obviously the volatility is going to not stop right there. And then we went up and exactly where we closed. And then the next day we began and we have risen higher, and we are very close to the upper end of the range now. So now what do we expect is something that you will want me to help you with. Oh, we would like to analyze, not only you, even I would like to analyze what is to be expected. So now let's again let's make that study right in front of you. So what I'm going to do is I'm going to use this tool, which is called the anchor volume profile, and we will use it to this level. And this is what we see. The anchor volume profile is telling me that the sweet levels are between 23,000. We can pull this up a little because of the last 2 days, 3 days moves. We've had some change in the levels. And these other levels now are going to be the range that we are going to look at. So today we might hit another high, and we might move higher, and we might extend. I think we can extend to somewhere around up to 23,100 or 23,000 for sure today. That's my analysis. We could be looking at rise to 23,100 to 23,000. That is what we could be looking at, and then we might cool off on Monday because the result will be out, the formation of the government will be out, and probably that we would then consolidate for some period until until there's more clarity on who the ministers are and stuff, and that there's more news on the way. So we could be petering around these boundaries for the moment. Now, when I say 23,345, we could extend lower on the lower ranges by a little bit more. So we could, this is the range I think which we should be talking about. So I would now push up the bottom of my range to somewhere around 22,114, which is not something that I see happening. 22,345, 22,1,000, or 22,114 could be a technical correction. There's no news that is going to bring you down here. And then this could be the high range of everything. These are all aberrations. And until we convincingly stay above 23,100 for some time, that would then build the base, which would take us to the budget rally. So this is as far as the Nifty is concerned. We should have a look at the Bank Nifty also. And similarly, in the Bank Nifty, you see the levels have been drawn. These are exactly the levels that I mentioned in my video. And look this particular candle of yesterday, how it is ranging between the top end of the range and the top end of the range and the bottom end of the range. How beautifully we're seeing that we are, beautifully tracking what we are. This is exactly the range that we are talking about. And going forward today, we could go to the outer range end of the limit. Probably this is what we should be looking to target today. And then we could peter out here for some time, or maybe in this area. And then maybe we will retrace back into the lower ranges and, spend some time here again. And then again start to move up from here is my reading of the chart. Now I'm giving you this reading over for the next week or so. So what is interesting is now these are the two areas which are significant, and I would look to cover my longs. I would look to cover my long and start my shorts in this area, and I would like to book out my shorts and start my longs in this area. So these are the two significant areas where I would initiate my trades, and in the middle I would do nothing. So this is how exactly I would like to trade Nifty and Bank Nifty. We will see what's coming in store for us in the day-to-day, and hopefully the construct that I'm trying to explain to you will be something that I foresee happening and could be something that we could see. So do take a screenshot, go back to the video again, take a screenshot of the levels that I've shown you, and see what happens. And if these levels come through, you will understand that the science that I use behind getting my levels is very simple. It's based on the volume profile. Even you can do it. And I run a course to teach all the nuances of using the volume profile and getting your own levels. If you're depending on getting your levels from people like me or from tipsters or from other channels, start doing it yourself. It's not very difficult to get this knowledge. Get in touch with me. Comment in the comment box that you want to talk to me, and we can get talking. And if you're interested, I can help you skill up and take the reading of the charts to a level where you can then decide to take your own levels and trade on them. That's a part of the trading journey. You should be doing it on yourself rather than depending on other people to give you these levels. So that's all for all the knowledge that I can share in this video. Do subscribe to my channel if you haven't still, and do like the video if you think this helps you. And I look forward to listening from you, hearing from you if you are really looking to level up on your trading game. Bye for now, and look forward to